Alrighty, folks. We have warned you for quite a while now that the pain was going to come in multifamily. Unfortunately, it's still coming, and I think it is going to get worse. So not only have we seen the interest rate rise, which is also pushing cap rates, we are now seeing rent declines, this nasty thing called reversion to the mean, and it's all kind of compounding together to create a real big mess. Let's have this conversation with the one and only Jonathan Twomley, man. How you doing?
I'm doing great, Michael. Happy to be here.
Yeah, I'm really happy to be out of.
Week.
Yeah. Oh, that's so nice to see. The audience loves you. I got to tell you, you and I were made fun of, and we're for selling, right? We sold early, right? We didn't know a pandemic was coming and rates were going to zero again, but we sold early. But I got to tell you, I actually had this conversation with Ken McElroy as well. On his podcast. And Ken was like, I don't know what people are doing the last 2 years. He didn't buy anything for 2 years and people were overpaying. He was starting to ask himself if he was doing it wrong. And now we're looking like geniuses because, again, we have the dry powder. We didn't burn our relationships. And it's just everything is going bad. Cap rates up, cost of money up, LTV down, lending tight. Now rents are falling. Now that even the top line is falling. So NOI is falling, and we got higher taxes and higher insurance. It's like, oh, it's a mess.
Well, thanks everybody for coming. Talk to you next week.
See you next week. But I mean, it's just a mess.
Yeah, it's listen. I remember when I first got into real estate. I mean, years and years ago, and I left my law firm. One of my good friends there, who was partner in the real estate department, said, I hope you're ready for the fact that real estate is cyclical, right? She's like, you got to be ready for that. And then ironically enough, we had this really long cycle, right? After that. And then it got extended by COVID. And there's all these people out there who really came to believe that real estate was just like it was a unidirectional unstoppable force.
Can't miss,
right?
Trees grow to the heavens.
Yeah. And so when you had people like you and me who have been around a while, seen a couple things, and know that these good times can't go on forever, and we kind of say like, hey guys, like, not saying don't buy, just saying like be cautious, like kind of know what you're getting. Be careful. Like things could go wrong and you got to be prepared for it, and then getting like slapped for that.
Oh,
right?
yeah.
It's kind of
called all kind of names. Yeah.
Oh my God. And like being accused of timing the market, and like I remember that. I remember people were saying, you're trying to time the I'm not trying to time the market. I'm selling and taking a profit. And like now is a good time to sell. So I'm selling, right? So, but anyway, I don't want enough of the gloating and I told you so's. I mean, the fact of the matter is, we had this really unique situation of just relentless rent growth for a decade or more. Somebody posted something really interesting the other day to, I think, LinkedIn. And it was a chart that showed rent increases over the last 15 years or so versus the rise in income. And income had gone up like a little bit. The line was not flat, it was upward, but it was upward like slightly over that time. Whereas like rent had gone like a hockey stick. And that was even before that was like just the last 2 years was just a little tiny slice of that, right? So back in 2019, I mean, I was already sounding the alarm when people in the multifamily industry were going like, wow, look at this rent growth. Rent growth is amazing. We were always taught to underwrite 3% rent growth, but rent is growing at 5-6% a year every year, right? Isn't this great? And I was like, yeah, but incomes are not rising really at all. And like this can't, like, this is not sustainable, right? This is not a sustainable model when rents grow like this and incomes don't. Now, the last couple of years, we've had a much better income growth, but still, like, it's nothing compared to like the rent growth that we've seen over the last 15 years or so, and especially over the last 2 years. And when you have a situation like that, were especially as hot as rent growth was for such a long time, when then you have an event like COVID that then just kicks it into like hyperdrive. I don't even want to say overdrive. I mean, this is like
Yeah.
Star Trek warp speed rent growth, right?
Agreed.
20% a year. I mean, it was just insane. That just can't, not only can it not sustain at that level, even though there were people out there who like convinced themselves that it would, and were overpaying for property on the assumption that this was going to keep going. But that you knew that that was going to go into reverse because of two things. One is you would just hit a ceiling with how much people could afford, right? And two, that kind of like the market mechanism actually kind of works sometimes, right? That kind of rent growth makes all the developers and all the banks jump in, and so it's like you can just go back 3 years ago or 4 years ago and make a list of like the hottest real estate investment markets in the country, right? By hot, I mean the ones where everybody was going, right? Where they were all piling into. And then go get a list of the places that are oversupplied right now, where they have actual rent declines already. It's the same places, right? And real estate is always like that. It's always like that, right? So everybody, the herd just follows itself. Somebody starts this. And have you ever heard of the expression what a Judas slam is? Do you know what a Judas slam is?
No, sorry, I don't know that. No.
So a Judas slam, so for herding animals, right? They follow the herd, right? So
Sure.
and a Judas lamb or a Judas sheep is a sheep that is trained to lead the herd quietly into the slaughterhouse.
Oh.
All the other sheep will just follow the Judas sheep, and you can obviously understand why it's called the Judas sheep, right? So
sure, of course,
the Judas sheep betrays all the other sheep by leading, and the Judas sheep gets away because the Judas sheep is like, this is its job, it's trained to do this, right? So all the sheep just so there are some Judas sheep out there who like led the real estate herd into these certain markets,
and they're going to walk away. They made their money. They're going to walk away basically unscathed because it's non-recourse debt.
Right. They got in early.
And here's the deal. And they will be the next guys launching distressed funds saying, see, I told you so. Come invest with me, blah, blah, blah. I'm like, listen, this is going to be terrible.
I mean, listen, so I'm not calling those people Judas sheep is a little bit unfair, because what they are the people who spot the trends early, right? And they get in and they start making money, and then all the casual people kind of follow them because it looks safe. And there's this always this market dynamic where when I
guess what I was saying, just to be clear, is they rode the wave to the very end. They're falling, then they're just going to pivot and do something else. So this is not. I wasn't. Yeah, these are.
But a lot of those people got in and got out, right? Because they recognize these trends, right? They're the ones who understand that when everything looks bleak, that's the time to be aggressive. When everything looks great, that's the time to be scared. So Ken McElroy, definitely not lumping him into the Judas sheep.
No, not at all.
Example. But Ken McElroy, if he's not buying anything for 2 years, it's because he's like seen a thing or two before.
Yeah, he's like disciplined and conservative, and
exactly. But it's all the like all these new people who have never seen anything, who think this is going to go on forever. My friend Brian Burke is like this too. I mean, Brian like sold off almost his entire portfolio, except for a few key properties that he knew that he wanted to hold long term. Sold everything else off in 21, 22, when he saw everybody like in a frenzy buying stuff. And this is the thing that you have to learn about real estate, is that it can look really good for a really long time, and then it can suddenly change. And you have to be prepared when that the macro environment shifts. It can get really nasty really fast, and you have to be prepared for that. So when guys like you and me say, hey, you got to set yourself up to survive these macro changes, even though there's nothing on the horizon right now, you need to be thinking about it. This is what we're talking about. We don't want you to be the sheep led to the slaughter. But back to the reversion to the mean piece. I mean, with rents going up so fast for such a long time and then accelerating at the end, there was really only one way for them to go, which was to come back to earth, right? And that's exactly what happened. And now it's happened to coincide with this nasty,
All kinds of other bad stuff.
oh, I mean, just this, it's coincided. Any one of these things alone would have caused some kind of like correction, right? But the acceleration of expenses, right, would have hit NOI and caused some kind of, maybe even with cap rates staying the same, and with NOI dropping, you would have seen pricing dropping, right? You would have seen a lot of people in distress. Interest rates rising would have also caused the same thing, right? And so now you've got, at the same time, rents declining in some markets and maybe ultimately declining everywhere. We're still not there yet. Expenses rising rapidly, and interest rates having risen rapidly. And these things, happening all at once, and put some people in a really bad situation.
Yeah, and just to layer on top of that, banks lending less.
Oh yeah,
right? So and I mean, just
banks are really, well, a lot of banks are going to have to take haircuts on these loans because, and I think what's going to happen is, frankly, some banks may have to restructure these loans as they sell them to new people, right? I mean, they're like, not only sell them to new people, like as the banks bring in a new operator, or there is a sale of the asset, right? Which is essentially the bank forcing the sponsor to sell to another operator, but the bank is also going to have to take a haircut on the loan because the deal will not survive at the new price, right? Because nobody's going to pay enough for the deal to continue to service that loan, right? By the bank's own metrics, right? The bank imposing the 1.25x DSCR requirement, like some of these loans will not make it even in the for sale. They're going to have to be restructuring them. And then, they're going to have to maybe eat the loan because, well, if another bank is not going to come and take them out, and they know that if they put the thing on the market, if they foreclose and try to sell, well, who's going to buy? Like either way, they're taking a haircut. So they might as well restructure the loan and keep it on their books as a performing loan. Right. But
at the end of the day, I feel very good about something I've started to say recently. The next 18 to 24 months, the financial engineers are going to get hurt, and they should. Where the good operators, the Ken McElroys, you, me, the ones that got conservative, are going to win because A, we didn't burn our reputations. B, we have capital, and we're excited. We've seen a thing or two. But yeah, back to my kind of earlier point around the Judas sheep. There's social media took off, and there are financial engineers who are good at raising money, who are not operators, and those are the guys I was trying to talk about who will mythically just instantly turn into distressed fund creators.
Right.
It's going to make me feel icky, I guess.
Yeah, it's the business equivalent, I guess, of like hot money, like the people who just jump into the next hot thing. I mean, one minute they're, a house flipper, then they're a multifamily investor, then they're in crypto, then they're in a debt fund. And they're really good at marketing, and it doesn't really matter what happens because they get paid up front. And there's always another person who hasn't
learned.
Hasn't learned.
There's another sucker in the room. They just get hot money born
every minute, like P.T. Barnum said, right? So I mean, that's unfortunately the way of the world, I guess.
Yeah. Well, you have an amazing Facebook group. You're launching you're redoing your course. Again, as a good operator, somebody who's been conservative, somebody who is not going to be hurt by the nonsense going on today. Tell us about it.
Well, yeah. So I'm really excited about the new program. It's been 4 years since I have redone my program. And obviously in 4 years, a lot has happened, a lot of new things to talk about. So I'm also like restructuring the program completely. Before I had it set up sort of like a college course, almost like you do this first, do this, do this. Now I'm restructuring the whole thing so that people get like what they need to start taking action right up front. And then the rest of it's like a reference library for when you need it. So it's actually going to contain more information than before, but it'll be structured in such a way that like you get what you need right away, right up front. And then the rest of it, when you need it, you refer to it and it's all good. So we're launching this by Thanksgiving. So we're building a waiting list now. And if you get on my email list, I'm going to be posting updates, sample videos, like things like that. It'll be fun for you to follow along. So this is going to be really exciting.
Very cool. Where would they do that? Where would they just get on your...
Well, just get on my email list. Come to apartmentinvestorsclub.com or go to Apartment Investors Club on Facebook and fill out the questionnaire. And if you put your email in there, you'll get on the list as well.
Awesome. Thank you, buddy.